Hello there, you're watching Your Trades on ET Now with me, Snehisha, and with me, as always, is my co-anchor Priyanka. And well, it's been an exciting day for the markets today, not only us, but for the US markets as well, because all eyes were on the election outcome. And Donald Trump is on his way to the White House, and that's something that has been taken positively by our markets as well, because according to his policy action plan, this bodes well for oil and gas as well as Indian IT, because these are two outward-facing sectors. On the back of that, IT, the Nifty IT pack was up more than 4% today. So that has done brilliantly in today's trade. Rather than that, it's been a very stellar day coming in for Nifty, more than 1% uptick coming in on that front. You had Sensex also 1.2% uptick coming in over there. The broader markets have also done phenomenally well today because Nifty, mid-cap and small-cap, both of them were upwards of 2% intraday moves coming in. So very stellar moves coming on that front. India VIX is something to highlight today because a cut of 7%, in fact more than 7% coming in on India VIX also today. So that is something that has also fared well for the street today. There you have it, almost an 8% cut coming in on India VIX also today. If you take a look at some sectors that have done pretty well today, of course it was the day of the IT stocks. Wipro, TCS, Infosys, Tech Mahindra, all of these stocks have been top Nifty performers as well, and you have these stocks that have outperformed the overall market as well. Now, in terms of winners and losers, all the sectors are winners in today's trade. There's not been any sector that's ended the day in the red. After IT, you have realty, energy, metal, media, PSU banks, auto, pharma, FMCG, and Nifty Bank. In that pecking order is where these sectors have fared today. But nonetheless, none of the sectors have ended the day in the green. So that is something that has worked out very well for us. Another asset class to highlight today is Bitcoin, because Bitcoin is also something that was at an all-time high level today. That surpassed $62,000. So very positive move coming in for Bitcoin as well. And however, let's shift focus back to our markets and take a look at what did not do well today. Among a bunch of stocks, one stock that did not do well today was Hindustan Zinc on the back of that government stake sale coming in, the green show option as well as the previous option and the offer for sale. So that is one stock that did not do well today. So largely this is what the trading day looked like. But Priyanka, what did you spot?
Actually, it was it looked like as if it was a Trump day.
Absolutely.
All the sectors which could get benefited with Trump coming in were buzzing in trade. The way you highlighted, the top gainers you see on Nifty
Yes.
are from IT pack. The biggest sectoral gainer is IT pack. Nearly 4% of gains coming in on IT pack itself. BSE IT, that was a top gainer. And of course, the kind of move we've seen in across the sectors was commendable. It was a green screen completely. The way index breached 24,300 level, and now there look no stopping. Yesterday data, if you compare it, there was a strong call unwinding at 24,300, means the traders were not sure of it. But then clear signals what we got from the Trump victory, and though it was neck to neck, if you see partially half the day had gone and there were no clear indications coming in, but the later half of the day there was no looking back. But then a few of the stocks we would like to highlight here: GAIL and Oil India. Of course, weak set of numbers came in. EBITDA margin was lower. Stocks, in fact, were up in the trade today. CCL was another kind of stock which was reacting on the earnings today. Titan, of course, but then this one also recovered. Maybe the sentiment was more towards it was a bullish sentiment across the sectors, and we did not see much of the reaction coming in. Though Titan, we saw that a weak set of numbers came in. Management even cut the margin guidance also. Brokerages have cut their target prices also. 3 brokerages which came in with a negative view on Titan. Titan did slip more than this in the initial part of the day, but later it recovered to close with the 1.5% of loss here. One more stock, Hindustan Zinc, government to divest additional 2.5 stake via OFS. That will be on the discount. This one stock was also trading with the pressure, though it will open for retail subscription on November 7th. 8.5% cut coming on Hindustan Zinc. So a couple of stocks which reacted on the news today. Otherwise, overall, it was a green screen only. But now, what to do if you're an index trader? What levels to eye on? And is this rally going to continue further? Rajesh Bhosale, who's the technical analyst from Angel One, is here with us. Rajesh, welcome to ET Now. Tell us, what did you make of the markets today? Of course, there was a clear breakout, but then do this rally has legs? Of course, we were the ones who have underperformed also relatively. If you talk about the global peers, is there going to be more of rebound rally for days to come, or major of the move has happened? What will you do on index?
Good afternoon, and thank you for having me on your show. First of all, yes, after October sell-off, finally there was some hopes and smile on traders' fraternity. If we see, Nifty has now closed around its last week's high, and we are expecting some more short covering in the coming days. Possibly 24,850, 25,000 can be expected in the near term. But having said that, such events cannot be digested in a single day, and we may see some volatility in the near term. Possibly any dip towards 24,300, 24,200 would be a buying opportunity. And as I said, 24,850, 25,000 can be expected with the short covering.
Rajesh, thanks for highlighting that for us and also spotting some levels for us. But in a market like this, we are seeing recovery. Is it now time to just start getting excited? And if so, what stocks are you picking for our viewers? Where are you seeing value emerging?
So I have two recommendations for our viewers. One call would be on a momentum pick, and one I would suggest as a reversal. So my first recommendation is on BEL. So BEL had a reversal from last week after testing its 200 DMA, and today if we see BEL broke above its resistance of 295, which was previously acting as resistance, and now we expect a strong momentum in this counter. Possibly BEL is headed towards the target of 322. One can buy it with a stop loss of 291. We have also witnessed a bullish crossover in RSI indicator. My second buy call is on Bharti Airtel. If we see market structure, recently we witnessed price correction, but Bharti Airtel, it continues to trade in a higher top, higher bottom structure on the weekly chart. It has now taken support on the weekly 20 DMA and daily 89 EMA, and also we are seeing a morning star pattern. On the futures front, we saw some long additions for the Bharti Airtel. So considering the risk reward at current level, one can buy Bharti Airtel. Stop loss can be kept at 1566 and the target would be around 1680.
So BEL, the top gainer, Rajesh feels that there are more legs to this kind of move. What we've seen on BEL, and Bharti Airtel is a second pick with a target of 1680. Thanks so much, Rajesh, for being on the show with us and sharing your recommendations. Moving on, let's get you the word from the wise. We did caught up with Punita Kumar Sinha, who's the managing partner for Pacific Paradigm Advisors, and she shared the list of themes she prefers to invest in India. Listen in.
I mean, for India, I would stay with Indian consumption, domestic consumption, and healthcare, travel, tourism, financials obviously is always a proxy to the economy. I would stay with something that is very made in India because anything, as I said, that requires you to be dependent on the other countries, particularly US, could have some erratic policy making that could result in volatility.
Okay, so let's shift focus now to the MSCI Reig. Let's put the spotlight on the expected additions and potential changes set to take place on the MSCI Standard Index. Let's go across to Somit, who takes us through what to expect. Somit.
Well, the MSCI changes will be announced on November 6th, but for India time it will be November 7th early morning, and the changes will be effective on the index from November 26th, but the flows regarding the same are expected to happen on November 25th. So what are the changes that are expected by the analysts on the street? 5 stocks can be added to the MSCI Standard Index. Now there is high probability of these 5 stocks getting added, but a borderline kind of probability when it comes to 1 stock getting added. Out of the 6 stocks, 3 are fresh additions, while 3 of them are moving from the small cap index to the standard index. Apart from that, it's the HDFC Bank which should be in focus, given the fact that its weightage on the MSCI index is expected to increase by nearly 1.6 percentage points, which could lead to an inflow of close to 1.5 to 1.9 billion US dollars. So keep an eye out for HDFC Bank. Apart from that, a few additions to the small cap indices that we should keep an eye out for is Newland Labs, Brainbreeze Solutions, which is First Cry, Jyoti CNC and Ola Electric. These companies are expected to see the highest inflow in the small cap index. Now, which are the stocks that we need to keep an eye out for in the standard index? On the fresh addition side, it's Adani Energy, Kalyan Jewellers, Oberoi Realty. These stocks are expected to see an inflow of anywhere between 190 to 310 million US dollars. Apart from that, it's Alchem Laboratories, BSC, which could see an inflow of close to 200 to 250 million US dollars. Now, Voltas also has a chance, but a borderline kind of probability of getting included in the MSCI Standard Index, and if it happens, then the inflows in Voltas would be more than 300 million US dollars. On the flip side, it's GMR Airports and Bharat Forge which have a high probability of seeing a reduction in their weightage, which could lead to an outflow of close to 30 to 110 million US dollars. So keep an eye out for all these stocks in trade. November 7th early morning is when the announcement will be out, and the flows regarding these changes will happen on November 25th.
All right. Thanks very much, Somi, for all those details. So these are the sort of counters that could get benefited. We stay for a short break here. When we come back, we get you the action from the derivatives space. Welcome back. You're watching Your Trades on ET Now. Now let's get you the action from the derivatives. And the trend has completely changed. What we saw yesterday, that there could, it appears at the start of the trade today, maybe there could be a phase of consolidation again on the index, the way the call unwinding happened at 24,300. But the trend has completely shifted now. There was a short covering on Bank Nifty. But for Nifty also now, there's a long built-up trend, and even on Bank Nifty. VIX is 14.9, and now there are the higher strikes which are being bought into 24,500, 24,600. There's what the maximum of the call buying has happened, and support seems to be at 24,300, wherein 24,300, 24,400 also, wherein the maximum of the put writing has happened. So looks like there are legs to this rally.
Absolutely, looking positive because 24,600 on the upside, 24,300 on the lower end are the levels to watch out for. But let's shift focus, talk about a high flyer in today's trade, and that is CCL Products, because after posting a good set of Q2 earnings, we caught up with Praveen Jaipuriar, the CEO at CCL Products, and he shared that they are on track to achieve the volume guidance and that they're also aiming for 300 crore top line by FY25 end. Let's go across and listen in.
We are on track for that. I can't say that we will necessarily better that. We are trying our best, but considering the market volatility and the situations, we probably are sticking to our guidance that we had given earlier. Branded business is doing well. The India business, we clocked around 200 crores revenue in the first half, out of which 65 to 70% would be brand. So we are 135, 140 crores of brand sales in the first half, and we are expecting to close the year with approximately 300 crores, which is up from 200 crores last year. So that's a segment which has done extremely well for us in the domestic market.
Right, and the counter did reacted also, 7.5% up, CCL Products. Thanks. Moving on, even we did speak with the management of Titan. We spoke to Mr. C.K. Venkatraman. Of course, weak sort of numbers, but then festive season, that one has aided the jewelry sales. But we did put up an interesting question to Mr. Venkatraman, and it was about the potential of the lab-grown diamond, what he sees, and what are the company's plan to venture into this segment. Let's listen into what he said.
We are clearly recognizing the importance of LGD in our lives, and because it is an extremely strategic and important matter, we will reveal things that we plan to do only when we are ready to reveal that. LGDs are still in the large sizes. As you come to smaller and smaller sizes of diamonds, and the cost of labor in a small diamond is a much higher part of the total cost of a small diamond than in a large diamond, which means that the price difference that is there between LGD and the natural diamonds will dramatically reduce in the kind of diamonds that the Indian jewelry industry uses to make. So the whole value proposition that LGD has, will not be there in much of the jewelry that Indian jewelry makes. The second is that the store of value aspect of LGD and the falling prices of LGD will have a bearing on customers moving from category from this to that and all that. Quite an exciting development in the industry, but we need to sort of make it work from our terms.
Okay, well, let's move away from a stock that was in pressure to another one that was in pressure today, slightly under pressure, 1.3% lower is where Manappuram Finance has closed for the day. It was a weak set of numbers coming in for this company in Q2. The asset quality has deteriorated, both GNP and NNP on a sequential basis. Let's take a look at what the management had to say in their earnings con call.
Decided to reduce the interest rate for the microfinance, which would be one of the lowest in the industry. We have also rectified all the deficiencies in our system to ensure correct strictly assessing the income of the borrowers, capturing and reporting of income and indebtedness for the borrowers from CACs, etc. Ashirwad has submitted a plan for compliance to RBI on 29th of October 24. We are hopeful of lifting the ban on disbursement at the earliest.
Okay, moving on to Dr. Reddy's numbers. It was a mixed bag of earnings. We did speak to the CEO of Dr. Reddy's on the overall Q2 performance and how DRL is looking to expand their business in India. Let's get you that slice.
We made two important moves during this quarter. We finalized the partnership with Nestle to bring nutraceuticals to India and actually to build a leading nutraceutical business in India. This is going to take a few years to build, but there is a huge potential, I believe, in better nutrition in India. And obviously, it is a very important market for us.
Okay, well, it's been a busy day for our markets back home, and we did highlight a couple of stocks that were either gaining or losing. But joining us on board now is Gaurav with a list of yet another basket of stocks that were in focus today. Gaurav, take it away.
Well, yes, SAN DLM is in focus, and the reason being that the company has entered into a long-term deal with Honeywell Aerospace Technologies to provide aircraft cooling system. Other than that, when we talk about MGL and IGL, these stocks were also in focus, and the reason being that CNG vehicle sales has gone up sharply by 69%, and as a result, when we talk about the areas where these companies operate, there we have seen a growth of around 60% on a month-on-month basis. Now, on this, Citi is saying that the vehicle base for both the companies can go up around 9 to 10% for FY25, and as a result, we saw some uptick in this counter. Next, let's talk about Hindustan Zinc, because government is likely to sell around 1.25% stake with an option to sell additional 1.25% stake, and the floor price is set at 505 rupees, and as a result, we saw some pressure in this counter. Next, let's talk about Polycab, because when we talk about this counter, the company is now selected as the lowest bidder for BSNL's project worth 4,100 crore rupees. And when we talk about the lowest bidder, we also have RVNL, because this company has also been selected as the lowest bidder for two of the projects worth 5,600 crore rupees. Other than that, LT Foods was in focus, and the reason being that Motilal Oswal has initiated with buy rating and a target price of 520 rupees, because they believe that the company is diversifying its commodity risk. And lastly, let's also talk about GAIL, because when we talk about numbers, we saw some weakness. Net profit was above estimates, but at the same time, Jefferies has upgraded the rating from underperform to buy and also hiked the target price to 240 rupees, and as a result, we saw some uptick in this counter. So definitely watching out on all these counters on the days coming ahead as well.
All right, thanks very much, Gaurav, for sharing all those stocks. But then moving on, let's even get you a preview on the the expectation that Street is making on Mahindra and Mahindra, which is all set to report its Q2 results. Let's bring on board Srishti to understand what is the Street penciling in. Srishti.
Well, this time from Mahindra and Mahindra, I expect a decent numbers, because this time the product mix is a little bit on the weaker side, because the automotive division has performed really well for the company, but it was the tractor division which was a bit of a drag. The margins could also see some bit of a decline on a sequential basis, but the automotive EBIT margins are expected to be just flat sequentially. But on the farm side, the tractor segment margins that are expected to decline 100 to 150 basis points sequentially due to negative operating leverage. If we talk about the numbers, then the revenue is expected at 27,445 crores on the standalone basis. EBITDA number expected at 3,796 crores, and the margins could also see some bit of a decline sequentially from 15.2% in Q1, and this time we are expecting the number close to 14%. But lastly, on the profit figure, there could be a jump sequentially on the back of the sale of the land by the company, as well as the dividend from Tech Mahindra as well in Q2, and this time the profit figure on a standalone basis is expected at 3,581 crores. But apart from that, what is the management commentary on the tractor division side? How do they anticipate the industry growth? And other than that, for their upcoming launch of their BEV, that is electric vehicle cars, on 26th of November, more details on that will be keenly awaited. So that's all the expectation from Mahindra and Mahindra.
So much for taking us through that. But viewers, M&M is not the only Nifty company coming out with its numbers tomorrow. We also have Trend, retail giant Trend, that's going to be coming out with its numbers. Let me take it across to my colleague Jinai, who tracks the company closely, to bring on board and tell us what we can expect from these numbers tomorrow. Jinai, take it away.
Well, definitely Street is penciling a strong growth for Trent. If you look at revenue, they're penciling in a 49% growth in terms for revenue, and for EBITDA, they're penciling in a 51% growth, moving that EBITDA towards 700 mark. The EBITDA margins are likely to remain at 16% flat year-on-year basis, whereas the profit is expected to surge 43%, coming in at 414 crores this quarter. If you talk about the key factors driving this growth, then the revenue is likely to continue growing on the back of store expansion. They are penciling 15 fashion stores opening for this quarter of Q2 FY25. Also, they are expecting a 12% like-for-like growth in this quarter for the fashion segment this quarter. Moving ahead, also there are some key monitorables that one need to keep eye on. The first is demand outlook for metros and tier 2, tier 3 cities. Also, what is the commentary for festive season is will remain a key watch out for. Also, a store expansion guidance is something will remain as key monitorable also.
43% of jump we are expecting in PAT on Y&Y basis. Thanks very much, Janay. Let's see how the numbers come really out. With this, it's a wrap on this edition of Your Trades. Thank you so much for watching.